I bring in First Trust Advisors Chief Economist Brian Wesbury. Okay, the tax cut package, what little we know about it, reducing rates for corporations and individuals, etc., will it stimulate the economy so that we get an extra 1% growth in GDP?
Well, I'm going to say yes, but I'm optimistic about this because I think we're going to get a cut in the corporate tax rate. What I'm worried about is that they're talking about adding either a fourth or a fifth bracket. And what we learned from Ronald Reagan is it's the top marginal rate that matters the most. And so if Republicans throw in a higher top marginal rate, that's going to offset some of the positives from a corporate tax rate cut. But net, if we don't see that, we will get at least 1% more growth. And by the way, Stuart, that means over the next 10 years, $3 trillion more in revenue just from economic growth, so that they can use that revenue to offset the cost of any tax cut.
The most important tax cut to you, though, for the economy, is the cut in the corporate tax rate and the cut in the rate for small businesses. That, to you, is key?
Well, yes and no. I think both. The average corporate tax rate in Europe, continental Europe right now, is 18.8%. Ours is 35%. No wonder companies want to keep money over there, continue to grow assets outside of the United States. So we need to bring that rate down. And if we bring it down to 20%, that is going to bring investment back to the United States. No doubt about it. But if at the same time we raise tax rates on higher income earners, that slows down savings and investment in the United States. So all I'm saying is that you can't supply side tax cuts mean lowering tax rates on everyone, not just business, but individuals too. And if you don't do that, you're not going to get the bang for the buck that you hope for. If we were to raise tax rates on individuals, cut tax rates on corporations, I do believe the economy would grow faster, but not as rapidly as it would if we were able to cut tax rates on everyone. And that's really what I think is fair. And would be best for economic growth over time.
I think the market sees that, by the way, and the market is up again this morning with 36 points higher, now 23,364.
Right.
Looks to me like the market says, yes, we'll get a tax plan, and yes, it will be stimulative. Am I right? That's what they're saying?
I totally agree with that. Throughout the entire term of Barack Obama, I believe the stock market was at least 30% undervalued relative to where profits said it should be. That undervaluation has now shrunk to about 10%. In other words, markets are no longer worried about higher tax rates, more spending, more regulation. Those were the things that were keeping the stock market back. It could do even better. And right now we've close that gap. If we actually get tax cuts, we're going to get at least 10% more out of this market and probably even more. And by the way, those capital gains revenues are going to help to pay for this tax cut too. So I certainly hope that these Republicans push for a dynamic score for this. I mean, we're going to have higher economic growth, more capital gains, higher stock prices. All of that allows us to cut tax rates across the board and not add this higher tax rate. That's shooting yourself in the foot. I don't know why they're talking about it, and I wish they weren't. And I hope in the end that that's left on the cutting room floor.
Hey, Brian Wesbury, thanks very much indeed for joining us. We do appreciate it, as always. Now.